Hey, what's up guys? This is Simon Effects. Welcome back to another video. So today I'll be going over the order flow concept. Some of you guys have reached out to me asking me questions about how to know exactly when to get into the market and when to stay out of the market to avoid necessary loss. That's the main reason I made this video. So I'm using a trade setup I actually took recently to explain how order flow works. But before getting to that, let's first understand the term order flow. So what is order flow? So order flow is basically how you understand market price action using basic concepts like trends, liquidity, and break of market structure. So we'll be going over these terms one by one. Now let's talk about trend. Now trend is when price is going in a particular direction. So we have two types of trend. We have the bullish trend and we have the bearish trend. Now bullish trend is when price, is going all the way up, and the bearish trend is when price is going all the way down. It's very simple. So you have the bullish trend, price is going towards the upside, and you have the bearish trend, price is going towards the downside. Okay, so we also have liquidity. Now there are many types of liquidity. We have different types of liquidity, but there's a specific type of liquidity I want us to talk about. Okay, so now say for instance, price is currently on a bearish momentum. So you can see price, coming all the way down. This is an expansion. This is a retracement. Price expands, traces, expand, retraces, and expand all the way down. And we have a break in market structure, right? So this is a break in market structure. So this is a confirmation that price is about to reverse all the way up. So we have price, coming all the way down. This is a bearish trend. This break of market structure signifies that price will start to go all the way bullish. Now let's say price, after creating a break of market structure, it traces all the way down and goes up, but does not break any structure on the far left side, right? So price does not break any structure on the far left side. So this low responsible for creating this structure is basically a liquidity. So that's how liquidity work in a trend. Now, like I said, we have different types of liquidity, but this type of liquidity specifically is the liquidity I use most of the time to get into trade. So when I see, price not breaking structure on the far left side, I immediately know that price is definitely going to tap this low before it continues the bullish momentum. So this basically is liquidity. The banks are trying to push price all the way up, but as you know, the banks like to manipulate with the traders. So whenever you see price not breaking structure on the far left side, you immediately assume this low is in liquidity. Now, there's not a 100% certainty that price will definitely going to go all the way down, but most of the time, at least 80% of the time, price do end up coming all the way down to tap out the liquidity before it continues the bullish momentum. So it's very simple. And finally, we have the break of market structure. So the break of market structure is very simple. It's just a way of confirming when price is in a reversal. So as you can see, price has been coming all the way down. Even this right here, okay? So this right here is a break of market structure. So this signifies that price will keep going all the way down. So price expands all the way down, retraces all the way up, expands all the way down, and there's another break of market structure right here, okay? So this and this as well is a break in market structure, but this is a bearish break in market structure. So immediately the price expands all the way down and goes above the last high. This break of structure automatically becomes a bullish break in market structure. So price is about to reverse. So price is about to go on the bullish momentum. So we have a first break of structure right here, and we have the second break of structure right here. So as you can see, this is the last lower high. So this high right here broke this high. Therefore, this became a break in market structure. So price retraces all the way down, expands all the way up, and created another break of market structure right here. So this basically is our second break of market structure. And as you can see, price retraces all the way down before it continues the bullish momentum. It's very simple. Okay, so this is XAU/USD, the gold dollar, and this was a trade I got into recently. This was a 1:27 risk reward ratio trade setup, and I got into this trade on Wednesday, and I opted out on Wednesday. So basically, it's like a week before this trade hit my TP. So how exactly was I able to catch this kind of trade? How exactly did I enter into this trade? What was my mindset? What was my logic? How exactly did I go into this trade? So before we can understand that, we have to go up onto the higher time frame. So whenever you get to a chart, right, you don't just go to any time frame like the 15 minutes time frame or the 5 minutes time frame and you start to look for a setup. It doesn't work like that. You have to go first to the higher time frame to have a bigger perspective. You always have to first use the higher time frame just in order to have a bigger perspective. Then you refine down to the lower time frame to find a trade setup So now let's go on to the daily time frame. Okay, so on the daily time frame, I think I going to trade about this area right here. Okay, so as price was on a bullish momentum, so as you can see, the bigger perspective says price is on a bullish momentum. So I have my mind set on looking for a bullish entry. I don't intend on looking for a bearish trade setup. All I was just thinking is a way to find a bullish trade setup. So as price was coming all the way up, right? So price was coming all the way up. There was a little retracement right here. So price goes all the way up. Now I know price will go below this low right here. So some of you might say, well, how do you exactly know price was going to go all the way down to tap out this low right here? Just like we said on liquidity. As you can see, this structure right here did not break any structure on the far left side. So basically, this low is a liquidity. So price is definitely going to come all the way down before price can continue all the way bullish, right? Because price, doesn't just go on a straight line, right? Price doesn't just go on a straight line. Price has to expand, retrace, expand, retrace. And those responsible for pushing price up are the banks. So they like to manipulate as well. So price doesn't just expand, retraces, expand, retraces. Sometimes price does what we call a mitigation. So price taps out some lows. So there are some people we know who have bought at this level. There's some people we know who bought at this level. There's some people who bought at this level. So price will just tap all of them out before price continues the bullish momentum. So I knew this low right here was a liquidity. So I knew price was going to go all the way down. So all I had to do was to patiently wait for price up from this point to go all the way down and tap out this low right here. As you can also see, we have the fair value gap right here. So all this right here is imbalance. All this right here is imbalance. So I knew if price was going to keep going all the way bullish after tapping out this low, it has to come down into this imbalance and fill this void, right? Now, this was very, very, very fast. This was very fast. As you can see, this I think um was about close to 20,000 pips, right? So it was very fast. And this just happened within, I think, like 3 days, because this was when Trump, announced the reciprocal tariff or whatsoever. So this really, really pushed price all the way down, right? So price came all the way down and immediately price filled this void. I knew price would start to go all the way bullish. So I started to look for a break in market structure. So now, in order for us to find an actual structure, we have to go down to the lower time frame. Now let's go down to the 1 hour time frame. Okay, so now as you can see on the 1 hour time frame, now you can see we have some structures, right? So we have price, coming all the way down. You have price retracing coming all the way down. And from this point on, a new price was on a bullish momentum. So I started to look for structures, but I didn't actually find any structure, on the 1 hour from this low right here up onto this high right here. So this was where I found my structure. So this low right here. So technically, to be honest, I didn't really use the 1 hour time frame. I actually used the 5 minutes time frame. I got my confirmation from the 5 minutes time frame, because you can see right here, this let's have a closer look. This other block was responsible for breaking this high. So basically, this is a break in market structure, right? So this is a break in market structure. So this other block was responsible for breaking this high right here. So if you were going to get into this trade, you can simply just use the 1 hour order block. But I didn't really use the 1 hour order block for my confirmation. I used the 5 minutes order block. Now let's go down to the 5 minutes time frame. Okay, so on the 5 minutes time frame, as you can see, price broke this high right here on the hour time frame, right? So on the 1 hour time frame, we saw that price broke this high right here. So this was the order block I used to get into the trade. So I knew this order block was a very, very, very valid and strong order block. So then a lot of reasons I knew price was going to respect this order block. One of which was that, this order block was responsible for breaking this high right here. And it didn't just even break only one high. It broke about, I think, two highs. So it broke this high right here and it broke this high as well. I don't know if you can see this right here. So this high as well. So basically, this is a steering breaker. So the other block I used was actually a steering breaker, right? Now, a steering breaker other block is very simple. So you have a break of structure, right? So whenever you have a break of structure, so the other block responsible for breaking that structure becomes a valid other block. But a steering breaker other block is quite different. It has to break two highs. So whenever price in the market breaks two highs, that other block responsible for breaking those two highs is a very, very valid other block. So I call it the steering breaker other block. So as you can see, this other block right here broke two different highs, right? So I simply just set my trade setup right here. So I simply just set my trade setup right here. So this is where I entered. I think I entered around 34.6, right? So I set my TP just right here. On a normal occasion, most trader will likely set their TP at the very high of this structure right here. So this is a bearish trend, right? So this was a bearish trend all the way down, and this is a bullish trend. So most traders will just set their TP at the tip of this high right here. But I knew price was gonna go beyond this point right here. So how did I know that price was gonna keep going all the way up? Now it's very simple. Okay, so in order for us to understand this, let's go to the 1 hour time frame. Okay. Now on the 1 hour time frame, just to have a better perspective. Now, whenever I see price, let's say price is on a bullish momentum, right? So whenever I see price come all the way down and goes all the way up, what I always assume is that price will have to go higher from this low to this high right here. So price has to do 100%. So from this low right here to this high right here is just 100%. So price has to double that. So that is my assumption most of the time. So that is how I actually trade. So most of the time I don't use this high right here to set my TP. I know price, for price to come all the way down to tap of liquidity, I know price wants to keep going on in bullish direction. So this is how I simply do it. So I just use from this low right here to this high right here and just literally place the height over this high up onto wherever the price may get me. So this is basically what I did, right? And as you can see, this is where I set my TP. So I set my TP, I think about 33.40. I think I set my TP just right here. All I know is that it was about 1 to 27 risk to reward ratio. Now this exactly isn't 100%. So if I take this from this low up until this high, as you can see, this is the 100%. It was going to reach about 3,400 level, but I ended up opting out of the market at this right here. Now the reason why I set my TP right here was just because at this TP I hit my target for the whole month. So I didn't want to keep prolonging this, because this was about a whole week. It was about a week. It was about 6 days. So I didn't want to prolong it. So I just set my TP at this level right here, and price on Wednesday, tap my TP, and that was it. Now, I hope you really find this video helpful. If you have any question at all, you can ask in the comment below, or you can simply reach out to me on WhatsApp, link in the description below. And if you're here to subscribe to the channel, be sure to subscribe. Thanks for watching this video, and see you in the next one.